Hi, this is Keith Furrow, the trust name in real estate along the Gulf Coast. Today we wanted to talk about title insurance. Now, first thing I'm going to say is I'm not a real estate attorney. I'm not an attorney. Okay, so there are some things that I'll say that could be subjective, but most of what I'm going to talk about is not subjective. And so I just wanted to say that out loud. Now, what does title insurance protect you from? Because it's insurance. Obviously, it's protecting something. So what title insurance does is it protects the record. Whatever's recorded in the county, whether they be easements or whether they be the legal description or the rules on the community for HOA, once they're recorded and they apply to everyone. When you sell a piece of property, you can sell it with certain rights and certain rules. If it's recorded and sold that way in the agreement you have, then that stays with the property unless someone has a way legally to unencumber that. Okay, so that's important. They say, okay, we got title insurance. What if it's a recorded of record? Well, why would that ever be an issue? It's you don't have to record it. I mean, if I work a deal and we transfer money, everybody's happy. Well, the risk is if you do that transfer, yes, that's legal. Yes, it's recorded. But without title insurance, some Vietnam vet comes out of the cave, didn't realize that the war was over. And all of a sudden he comes back to Gulf Breeze and he says, hey, there's a subdivision there. That's my property. Well, the thing would be is there would have to be a lawsuit to quiet title. When that lawsuit was done to quiet title, when they did that, what would happen? Well, the attorneys would have to go in and fight. Now, they're not going to tear the houses down. They're not going to do that. But they'll come up with some kind of agreement to fix that. Well, the thing is with the property, the title insurance only covers you up to the sale price or the loan amount. Now, lenders are not going to loan money unless their interest is covered. They're not. The difference between what you borrowed and what you paid for it is a gap. You can get additional insurance at that time. Okay, so if you don't do that and then you decide at a later date you want to come back, and there's a time limit where you could do it within a few days or a few weeks, but if you don't do that and then it comes up later on, you'd have to buy the title insurance again, because they have to go out, do a research all the way back in our case to the Spanish land grant, because Pensacola, for example, is the oldest city. So it was the first settlement in North America. So with that in there, they would go back all the way to the Spanish land grant. They would research it. Then an expert would examine it. They would give an opinion. Then an underwriter is going to look at it. They were going to determine if there's endorsements needed for FHA, VA, PUDs or planned urban developments, those kind of things. And then there'd be a closing person who would close. They get paid a fee. And then also you've got the exam, the search, the cost of the policy, and then the closing fee. And that's the process. But once that's done and it's recorded, you're protected up to the amount that you've got. So it's very, very important to understand. It minimizes surprises. And so I always tell someone to get title insurance. And I would say 99.9% of people, and I would never buy without it. So that's basically what it is. Thank you. Keith Furrow, Keith Furrow Associates. If you like us, please like our videos, please subscribe, and please send us feedback and let us know if there's more we could do. Thank you. Have a great day.